We are live. Nikki, good to see you. And you're on the home front in Cincy, right?
Yes, Cincinnati, trying to stay
You're
hydrated.
and you're born and raised Cincy gal, right?
No, I have bounced around, but you know what? I've been here for over 20 years. So this is home.
Yeah, that's not bouncing around. I mean, you've been at 5'3" for almost 20 years now too, right?
Yeah, yeah, I've been here going on 17.
And Rob, Chrisman, Ella, how long ago did you start when did you officially start your newsletter? I know you started it informally, Rob, but when did you formally like go out on your own and
When did I get a business license?
yes,
2008.
2008. Okay. Okay. So that's but you wrote the commentary I mean, I remember reading it before then. It was decades before then, right? Wasn't it?
Yeah, yeah.
So there we
But
go.
as subscription rates grew, somebody said, "Well, what if you get sued? You know, don't you want to leave Robbie and Marie with some inheritance?"
Hmm.
I said, "Yeah, probably. Well, then you should probably incorporate. You should probably have a business license. That way you can deduct, your bills. Because I have a lot of people look at my revenue, they don't think about my bills. So I can deduct my expenses. It's all worked out. It's all worked out better than if I had mapped it out, 20 years
Yeah,
ago."
love it. And I seen the Q&A already. Rest in peace, Hulk Hogan. Rob, I'm guessing you were not a professional wrestling fan.
No, but I know some.
Like in real life, personally, you hanging
I
out?
know a fellow who lived, I guess it is past tense, lived near Hulk. Hulk Hogan had a house in near Tucson. I believe that he died in Florida,
Hmm.
but you'd see him at the club. Nice enough guy, supposedly. Were you a big fan? Are you big? Would you like to see pro wrestling on the White House lawn, Rich?
No, when I was a kid, I was a fan. Like, I mean, I was a big fan, like in my youth, and then not as much anymore. The Rock, when The Rock was big, I think I dipped back in. Nikki, professional wrestling fan.
I mean, who doesn't? Do you know what the rock or can you smell? How'd
Yeah.
that go?
Can you smell what The Rock is cooking? Yeah.
Yeah.
Yeah, The Rock certainly refamed wrestling for a little while, but yeah, some big news. We had Ozzy Osbourne and then Hulk Hogan, and a couple back-to-back days, couple notable names. So hopefully the rule of three doesn't come in and we get the next announcement sometime. It seems like how those things work, but hopefully not. So. All right, well, let's go ahead and get into it. This is the big picture, presented and sponsored by our great friends at Depth. For nearly 20 years, Depth has been the trusted communication and marketing partner for fintechs, reshaping housing finance from POS to LOS to everything in between, led by marketing industry trailblazer Carrie Milam and her awesome EVPs, Leslie Colley and Lindsay Neal. Depth does the job getting your story told. And if you want to find out more about the great team at Depth, over 50 years of combined experience, all in our industry, get a hold of Rob or I, or check them out at depthpr.com. So there we have it. And each week, I am pleased to be joined by my esteemed colleague and co host. This week in the Bay Area, it is Rob Chrisman. Rob, great to see you.
Good to see you too. Are you letting your hair grow out a little bit, Rich?
I just got a cut actually, but a little bit. I mean, I had no hair for so long that I'm enjoying having hair. So,
Good,
and
good.
this
Are you
week,
are you letting
Leave
yours
it at
grow out, Rob? What's your
Well,
what's your next style
you
gonna
know,
be?
yeah, I left myself wide open for that one, and I realized it halfway through when I was asking Rich, because Rich used to basically shave his head,
hmm
or at least have a very close crew
hmm
cut.
hmm
And so I thought, oh, we were kindred spirits. And then there was some period of time where I didn't see Rich. The next time I saw him, his hair was long. I'm like, what the hell? Oop, did I say what the heck? Uh, but
A lot of
And
yeah,
people
now
thought
the
I was
hair
he's
bald,
got,
is
yeah, like using hair products. I'm like, no, I swear to God, I've always had hair. Like, I mean, one of those families where like my, grandparents and relatives are dying with full heads of hair at like 85. So, I think I'm good, but we'll see. So. This week, back by popular demand, she has spent nearly 20 years with Fifth Third Bank, a top 20 bank in America, which right in my backyard. It's that perspective sometimes gets lost on me because I bank at Fifth Third, and they are, yeah, right in my backyard. But she manages their affordable lending and CRA program for Fifth Third Bank. It is Nikki Bialka. Nikki, thank you so much for coming back on the show. Looking forward to the conversation.
happy to be here. You guys are fun.
This should be fun. And yeah,
we're not that fun. We're not fun behind the scenes, Nikki. Let's just get that straight. Uh, and you know, if I had a dollar, Nikki, probably for every time that you had to explain where the name Fifth Third was derived from, I could retire. Um, are you tired of telling that story?
You could probably explain it better for me. But did you know, Rob, have you been to Cincinnati? Did we talk about this last time? I think you've passed through, you have been. So we
Been there a
created a
few
whole
times.
new, okay, okay. So next time you come, I'll have to take you to the Fifth Third Museum downtown, where we have created a museum in our Fountain Square that shares the history of Fifth Third. But yes, it's often a question of how did you guys come up with that name?
And a couple funny things in the
Yes, I
chat.
remember my son Robbie was especially attracted to the Skyline Chili, um, some one of the Skyline Chili lineup. Anyway, we're really digressing here. Hair and now Fifth Third Chili. So
Fifth
we
Third
should
and
talk
food.
about
What's
mortgage
what's more
banking.
better?
There you go. There you
And
go.
good point in the chat. 20 years with the company. People are so moving around so much more these days. It's, I think like 10 years from now, we're going to be saying, if you're still at Fifth Third for 28 years or whatever it's, Nick, it's really going to be an outlier. People just aren't staying with the same companies, it seems like, as much as they used to. Have you seen that same
Yeah, what's up
observation?
with that? Like that's I often ask myself, like, was I supposed to? But quite honestly, over those years, I've had the opportunity to do so many different things that it feels like I've been in different different areas because of the different roles that I've been able to do. And God, mortgage, I feel like there is so much that I learn on a continual basis that hey, if I get the opportunity to try new things and learn new things, stick it out. It's been working so far.
Yeah, and you really have. You've done it all at Fifth Third. I remember looking at your LinkedIn and, like you've done sales, you've done operations management, you've done affordable lending, you've managed several different aspects of the residential lending machine there at 5-3. And that's a good point. It probably, you're always in the new. Every time I talk to you, you got something new going on, which is good.
Yeah, I'm the
Uh,
girl that raises her hand.
I'll do it. Yeah.
Yeah,
I'll tell you,
sign me up.
Nikki, I'm about $1,000 scratcher away from getting out of this Chrisman LLC gig. So people do jump around. I mean, Rich, you see it in the sports card biz. I mean, you end up rooting. Don't people now root for players rather than teams because some of these teams have a revolving door, whether it's football, baseball, basketball. Um, Everyone seems to be looking out for their own interest.
It is true. I mean, certainly people still follow teams, but like all the kids that work for my sports card business, the teenagers, they are, yeah, they follow more like individual players. Like they love Nikki's guy Ellie, down there in Cincy. It's
They
like,
did it too.
now our guy Tito's down there. So, like my crew here, they're pulling in they're pulling for the Reds as much as they are the Tribe this year. So, but yeah, it is true. So. All right, Rob. Well, as always, once again, the news is not slowing down in the mortgage industry. We have a funny comment in the Q&A that the next WrestleMania headliner, Paul Powell, keeping on the wrestling theme, but you got that still going on. You got the Vantage FICO thing, still a big talking point. in the industry. Open Door has become a meme stock. That some notable news this week in housing. A lot of positive stuff. It's been a lot of not negative stuff, but just change and things of that nature. But a lot of bipartisan housing stuff has emerged this week. Some bills in Congress. So, as we hoped, with some of the tax and tariff stuff starting to subside into the rear view a little bit, housing and housing affordability starting to, weave its way more into the minds of Congress folk and bills that are starting to introduce. But Rob, I'd be remiss if I didn't start today's show with, like we all have those moments where like you get like 20 text messages at one time, and for me, that's when usually like there's like a big sports trade, like the tribe trades somebody big or something like that happens, or if there's big mortgage industry news. So imagine my surprise yesterday when I was busy in some meetings with clients. I look at my phone, about 20 Swerbinsky plan text messages. Of course, I go to the interwebs and see that President Trump, he didn't use the words the Swerbinsky plan. I was a little disappointed, but is espousing the premise of it, Rob. So with that, I ask for your thoughts on my long bandied about affordability plan.
Yeah, follow the money, right? People are going to do typically what financially motivates them as a whole. Individuals look at what personally motivates them. Sometimes it's not finances, but if you look at a large population, typically you can follow the money, whether it's taxes or, uh, just their bottom lines. And so if something were to come along to help their bottom line somehow, somewhere, they would, of course, be, you know, probably be in favor of that. And I think that getting Congress, though, to agree on anything, is difficult. Not that we really need Congress anymore, given some of the things that are going on a national level, really. In fact, I think they're either on recess or about to be on recess. But if President Trump is behind it, it's golden, right? So I think that taxes, it would be interesting to see what happens. I thought, Rich, we were talking about Hulk Hogan and wrestling and the the Jerome Powell versus Pulte story, and I was going to say it's almost a tag team with Elizabeth Warren. You know, maybe Jerome Powell has reached out, tagged Elizabeth, who came in and said, Bill, what are you doing?
He's like,
Stay in your lane.
Is that Rohit Chopra's music coming in from the so
No, it's interesting how Elizabeth Warren suddenly echoed the thoughts of many mortgage bankers out there and many in the financial community by asking Bill, what's with all the tweets? What's the vendetta against Jerome Powell? Why, shouldn't you stick with what Fannie Mae and Freddie Mac are doing and not try to influence the Federal Reserve? But it'll be interesting to see what happens there, as always, right?
we'll see what happens. But I mean, in general, I mean, I think, at least a raise of the capital gains threshold on the sale of a home. Now, what Trump threw out there yesterday was like a full bore like there would be like hundreds of billions of dollars. I mean, there's just no way. But, I mean, once it gets beat up in Congress more, you could get more to what we've kind of talked about in the past. Maybe it's just for investment properties, for people that own 10 or less, or, people that have these characteristics. So, but Nikki, I don't know, did you see that news yesterday? Any thoughts on the premise of some tax relief for home sellers?
Yeah, I mean, I think I get the concept, I get the idea. To your point, I think a lot of it needs to still go through that beat up process to really refine it, to understand, if we're trying to generate people opening up the market and opening up inventory, it's fine to do it on that hand, but what are we doing for the first time home buyers? What are we doing to remove affordability barriers still, because that still persists? So if we're gonna spur selling, we're gonna create some tax incentives on the selling side. Are we still matching that energy on the purchasing side for so many people that want to get into that home that still might not be able to?
because we're seeing that right now, Nikki. Inventory's up, but
Yeah.
home sales are not good because it's a lot of super high priced inventory, sticker
Yep.
shock, rates are still kind of high. And I mean, Nikki, this week you just participated in the MBA's Affordable Home Ownership Advisory Council meeting in DC. And
I did.
yeah, I was just really curious and anxious to hear, yeah, your thoughts and commentary on like what was discussed there. I mean, that's the epicenter. So bring us inside.
It really is, right? So what was discussed there was really just timely. We've in the affordable housing space, there has been a lot of shifts with programs from special purpose credit programs, and what did those changes mean? And so I think that what we really focused on is, what do those shifts mean? Are we aligned on some of the things that we've been focused on? So, the building generational wealth and affordable housing report, and how do we kind of pivot as the administration priorities shift? How do we pivot the work that we're doing and stay consistent with that work? So that was good. We also got to hear from Matt Jones from the FHA. And he got to talk about a lot of their initiatives, particularly their loss mitigation waterfall, some of the things that they're looking at, and potential concerns or impacts to the student loan deferment and payments, and how is that going to impact default rates and homeowners. So it was good to get insight into what Matt and his team are looking at from an FHA perspective. And then we talked about, some of the leveraging the rental payment history. So our work group worked with the MBA to release a white paper on this, that if you haven't read, I encourage you to read that, because I think that, the MBA policy team did a great job of really explaining what are the best practices for lenders. Because at the end of the day, some of these solutions, it's about scalability, right? So even as we talk about Vantage and FICO and get into that conversation, the success of those solutions depends on our ability to scale them effectively and communicate effectively to our customers, to our teams, to our ops. How do we make sure that all happens? So, just kind of talking about what are the solutions that are out there that we really need to focus on as an industry to scale, what's being talked about, what are potential risks for consumers as things shift and policies change. And it's always great just to be in a room with people that are really energized and focused around this space. So to hear from Bob and to hear about the MBA's commitment and unwavering commitment in how we're going to remain focused on these things, and just bringing clarity around what some of these changes mean was pretty exciting.
It's awesome. And what rental payment history? I mean, one of these things I've been screaming about for like 10 years. It's such a no. Why are we not like factoring this in? It's like sometimes the mortgage industry maddens me. It just how just, difficult it is to do seemingly easy things. But why did it take so long? Any insight on that? And it feels like we're at a tipping point now where alternative, it's not even alternative credit. That's credit, in my opinion, just not on a credit report. But where are we at with that in America as we also, we're going to talk about this in a moment. The whole FICO Vantage that could be changing a little bit, and their scoring models. But we just love just your thoughts and perspective on that in general, like the credit scoring model that we've historically used in America. Some of the changes that are positive that have happened, recently, and maybe some other things that you're privy to that could be coming.
Yeah, so I think to answer the first part, why haven't we? I agree, right? Like it seems easy, but when you get into a change like that and really scaling it across the industry, that's when all of the different nuances or the ways that we do things differently will pop up. So I think, again, shout out to the MBA of delivering something that's a standard sort of best practice that everybody can follow, because we all have different groups internally. We all have different capabilities. We all have different systems, right? So I think some of the challenges, from my perspective, was consistency in how you can collect some of that information. So when you're looking at it from, let's say from a VantageScore perspective, where who you rent from is providing that information. Well, if only a small percentage of landlords provide that information, we're never going to scale that, right? Similarly, how do banks provide that bank statement information? If everybody isn't providing that information, the scalability is skewed because you might be able to do it for one consumer, but then the next consumer that comes in your pipeline, you can't do it for them because of the scalability, and we're not all doing it the same way, or we're not all at the same place. So I think some of that, just kind of getting everybody to row in the same direction so that we have some consistency for our consumers, for our teams, for our mortgage loan officers, and for the back office. I think that's just a challenge. I don't know. What do you
You
think?
bring up a very, oh, I'm sorry, go ahead.
No, I said, what do you think?
Well, you raise up a very good point, and which something that I've always wondered about. If I'm a landlord, I own one I own one house, and the tenant is thinking about buying their own place. I would say that on my priority list of things to do, it's not going to be very high to tell a lender that, yeah, my tenant has been making their payments wonderfully for 3 years without a hitch, without a late payment. 3 years, rain or shine, they've always made their payment, because I want that tenant to stick around. So at least I'm not going to be in a rush to provide that information. And I would imagine that some landlords won't want to provide it at all. So
A good point. It seems like, can't there like some sort of like, I don't know, like on a state level, even like online registry for landlord or something? You would think, I don't know. I don't know what the hell I'm talking about. I'm
but
brain.
if, once again, Rich, if I've got, 10,000 homes, if I'm Blackstone or something, sure, I've probably got that down to a T. I've probably got that all, policy in my policies and procedures. But if I've got a house or two or three, I don't, that's foreign to me. I'm not going to be too keen on doing that.
Right. And how easy is that to explain to someone that you get the same, right? You get one person that can provide that information and the other that can't. So that inconsistency from even a mortgage loan officer trying to explain it, if you explain that you might qualify and then we get in there. And so those are the types of nuances that I think we just really have to figure out as an industry if when we're to really scale it the way that we can use the solution in a meaningful way.
You would think on the state level, I mean, affordable housing is such a huge issue in this country. I mean, look at what's going on, right? There's all this, we have inventory out there. It's all six to $800,000 homes, and they're not moving. I mean, we just have we need to reshape the housing stock here in America. We really do. We need more affordable, smaller, single family homes in America. Like, you look at other countries, it's ridiculous how big our homes are here in America. Like, just do a quick chat GPT on like the average size of homes in major countries across America. Like America, we have these massive, massive homes in America, and it's because everybody's getting rich off of it, right? Well, but what's happened though is we're left with this problem where exactly where we're sitting here. I remember talking about this, Rob, 8 years ago on this show, that this is kind of where things were going, and it would seem that you would think that there would be some way, if it's in the state's best interest to create more qualified buyers that are renters, that there should be some easier way, to your point, Nikki, to galvanize all this info. But yeah, we'll see. But Vantage and FICO, Nikki, also going to be some, if indeed it's been green lighted, but that really doesn't mean anything. We got to implement this now. Do you anticipate some of the same challenges in that getting rolled out? And follow-up question, because somebody brought this up to me yesterday on a call, and I was like, I can't wait to ask Nikki this tomorrow. What about fair lending potential implications? You run FICO for one customer that gets approved. You run Vantage for another customer that doesn't get approved. Is that legitimate concerns? Nikki, we lost your sound, Nikki.
Oh, can you hear me?
Now we can hear you. Yep.
Okay. Yeah, 100%. Fair lending, what happens to the pricing? So what does a Vantage score, what does a Vantage score equate to 620 FICO? What are the pricing models for the Vantage score? So that right off the bat, which uh, I'm actually interested to hear, Rob, your feedback on that part. But I think from a pricing perspective, and then just from, again, a standardization, what if you pull both? Then what do you do? How do you reconcile them? Are you like, so I think that there is so much to figure out, but the good news is it's effective. We can do it now. We just don't know what we're doing, right? So the GSEs are really going to have to put some guardrails around this and help standardize how we approach this before any lender is going to be able to act on it in a safe manner to protect our consumers and quite honestly, to protect the process.
Yeah.
It's interesting when you talk to somebody who's been in the business for a long time or even a short time, and you ask them if you were starting from scratch, if Rich and Nikki and Rob and folks on this phone call went to a desert island and we were going to be there a long time and we needed to set up a home finance system, it wouldn't be what we have now. One could argue it wouldn't be anywhere near what has become in the housing finance industry in the United States. And I think that common sense answers are needed, but Rich, you're right. I mean, actually implementing some of these things, we saw that when Director Pulte tweeted out, "Oh, effective immediately, Vantage, rental income," and supposedly, the folks at Fair Isaac were caught flat-footed. Vantage was caught flat-footed. The GSEs were caught flat-footed. And everyone was like, "What? We're not ready for this." What the
Listen,
heck? It's
I mean, I'm not sure if Pulte is smart, a disaster, or somewhere in the middle. It's entertaining, if nothing else. I mean, it is, he's like a wild man out there. It's been a really wild last couple months with him as FHFA director. We've always had these, like Sandra Thompson was the epitome of class, and and just all the proper channels, and it's really been. I don't mean to laugh. It's, if it's like one of those, if I wasn't laughing, I'd be crying, I think, moments. But so
Yeah, I think you're right though. To some extent, it gets folks, it gets us moving in the right direction. But we also have to keep in mind that we are dealing with an industry that impacts hundreds of millions of consumers out there, tens of millions of borrowers. And the changes that certainly change needs to be made, but I tend to err more on the thoughtful side of things. But you're right. I mean, if him coming out saying effective immediately and hey GSEs, you need to react, if that gets something going, then good. But somebody has to think it out and think about the ramifications of these things. We were talking to Bob Brokesmith recently about GSE privatization, moving them away from conservatorship. And it's one thing to want it, but you can't tweet it out, hey, tomorrow they're being released from conservatorship. That would cause a disaster. And so the NBA, I think, continues to be the voice of sanity when it comes to, all right, let's think this out. Are we going to have a government guarantee or are we not? And I think Scott Bessent has stated that he doesn't want to see interest rates go up in the event when it comes time to actually release them from conservatorship, which is the right approach. The question is, how do we get there? And so hopefully thoughtful minds are working on that,
this is the big picture presented and sponsored by our friends at Depth. 2 decades of so ably serving the mortgage fintech space with strategic communications, public relations, marketing needs. Check them out at depthpr.com. Nikki, your passion for originating and helping put first-time home buyers into homes was just came across as infectious your last appearance on the show. A lot continues to change. Like I said earlier, we are seeing, like, I Google it. There's like three new bills in Congress this week, on, bipartisan related to housing affordability. And, we'll see what makes it through the Python. But, your current state of the union right now, how you coaching originators? There's been a lot of just change and movement and news headlines and originators that are focused on the first time home buyer market, affordable lending, products and borrowers, your current state of the union and how you're kind of coaching originators right now in this climate.
To me, it's back to the basics. Relationships win overall. What are you doing to proactively understand what any shifts or challenges mean for your families that you're serving? And what are you doing to proactively reach out to them to communicate what these changes mean? So, and then I think it's, instead of looking for new products, getting back to the basics. What are the products that are helping people get into homes? So while things might have shifted, special purpose credit program was the big shiny toy for the last year. There are toys that are still working. The old fire engine truck is still working. Get that toy out and get back to the relationships. And so I think that's my big focus is for the consumer side. And then for our community partners, there's been a lot of shifts for them as well. So while there's noise in DC, while there's a lot of bipartisan conversation, there are still things happening with funding shifts that are impacting our community partners' ability to serve in the way that they were serving prior. So what are we doing to make sure that we're also filling the gap for them and understanding what they're going through? So I think it's back to the basics of relationships. Relationships win at the end of the day, in my opinion. And being that trusted advisor of, while this is changing, this is still here. And also, guess what? I'm still here.
And is there a way for just loan originators, like because there is a lot changing and shifting funding for different organizations and programs, is there any sort of way to kind of like keep tabs on all this outside of having you on the show?
It's funny. I had a friend, he's actually not at the bank. He's a mortgage loan originator out of Chicago. And as some of this special purpose credit program stuff was being tweeted out, he was texting me asking what it means. And so I would do my best, and he said, "Could you just maybe give me like a weekly update?" I
Right.
said,
That's what you need, right?
"No, I wish,
It would be
but
depressing. I
no."
mean, yeah.
I said, "Rob Chrisman does that. You go read that."
Yeah, there you go. Hey, I need to interject briefly. Didn't mean to interrupt your train of thought, but Nikki, if I suddenly go black, it's because my battery is dead. It's not because of something you said. So
You're gonna
got
drop on me.
no, I'm just my battery is I hope I make it for another 10 minutes, but you never know.
Well, we've been working on creating the virtual AI Rob Chrisman, in case, you can't make this, that's not in
One that
place yet.
smiles, does it smile? Because it's fake if it smiles.
Touche, touche. So, um, Nikki, one misconception about affordable lending that makes you crazy in the marketplace. This wasn't on my
That
question list either, so I
You
just
know what? One it makes me crazy that people think that it's the work isn't worth it.
yeah.
I'll put it that way. That they're you might have to coach borrowers longer. You might meet someone that you're coaching and it takes 18 months to get them mortgage ready. And so, but there's also opportunity for people to get ready now, right? Who are ready now. So I think that that misconception of it's too much work, that bothers me.
Yeah, as it should. So, without a question. And going back to what you were talking about, the MBA, Affordable Homeownership Advisory Council, it sounds like their big priority is really just finding ways to scale some of these solutions that are working their way into the marketplace to lenders, easily and globally. How do you even do that? Because it is tough. I mean, the mortgage industry is unique in that you have tiny little hodunk community banks and credit unions. You got huge banks like Fifth Third. You have IMBs of all shapes and sizes. You got mortgage brokers. There's so many different types of people and companies originating product in America. It seems like just, a challenge, obviously.
Yeah. Well, I think it's about having all of those voices represented in the council, and the NBA does a great job of making sure that those voices are represented. And if not, what voices do we need to go hear from? So any of the things that I've been a part of, whether it's that or are you familiar with the Convergence Collaborative Initiative that the NBA is, you know?
I am, yeah.
So things like that, right? So Rob, Convergence Collaborative is essentially a place-based initiative that the MBA has done in 3 cities so far. So Philadelphia, Memphis, and Columbus, right in between
Oh,
Richmond.
yes.
Yeah.
Yeah.
So we were one of the key lending partners for the Columbus initiative, just an hour up the road from me. And they have done an amazing job. Back to your point, Rich, of making sure all of these voices are at the table. They're doing it at a very local level to not only ensure that we've got the lenders and the vendors and the practitioners, but we've got the community partners. We've got everybody at that table so that we really understand what are the challenges at that market level. And so it's giving us trends by city, but then very, very local things that we need to work on. So, to your point, there are a lot of voices, there are a lot of things in the ecosystem that we have to think about, but making sure that we're hearing from those voices and they're at the table and that we're taking them into consideration is definitely a priority from anything that I've been involved in with the MBA.
Yeah, the mortgage industry, it's been so dog eat dog competitive historically over the years. You got the broker banker thing, you got the bank credit union cat dog thing, and I try to always find the positive in things. And these last 3 years, I do feel like it has galvanized the mortgage lending community, those that are left, together a little further. That the broker banker thing isn't as hostile. The bank credit union thing, some people care, some people don't, but doesn't it feel like a more galvanized mortgage industry now, Nikki?
I think so. I mean, I think so. Listen, there's a saying that Jay Plum has in this space that in affordable housing land there is no competition. When we
Mhm.
come together and we do something for the community, whether someone at another bank closes it or Fifth Third closes it, of course we want Fifth Third to close it, and we're going to do it better than anyone, of course. But if they go to someone else, it's still a win for the community. So I think that sort of camaraderie in the affordable housing space and how we share best practices and really what's driving impact in the communities we serve. It's definitely something that I think is different about this space. The MBA did a CRA residential lending workshop the day after. So I was actually there 2 days. And so it was a broader group that second day. And I still heard that camaraderie. I heard, whether it was Chase or Wells or us or Huntington, we were sharing and talking about the strategies that are working, and then we were aligned on some of the challenges that we're having and talking through what are you doing over there? How are you solving for this? Are you experiencing this? And I don't know that that's happening at the rate that it happens in this space. But in general, it feels like and seems like the industry is recognizing, hey, we need to come together, particularly to solve affordability challenges. And even broader, we need to come together to solve any of the challenges that we're seeing or things and changes that are happening.
Yeah, certainly I'm trying to beat the drum a little bit and create awareness or remind people that the affordability issue isn't all on the shoulders of the mortgage lenders. There's plenty going on with homeowners insurance, HOA fees, property taxes. Interest rates are going to be here for a while, fine. And yeah, the cost to produce a loan is what it is. But there are other factors that are entering into the home buyer's decision making that impact affordability that are way beyond the reach of the mortgage world. So it's definitely an all-encompassing issue.
Yeah.
And our friend Bob Niemi, Ohio Mortgage Bankers Association legend, Bob Niemi, with very nice comment in the chat. He was involved, it sounds like, with you, Nikki, in that council meeting on Tuesday, and speaking highly of it in the chat. So. Back to that meeting, one of my fears about the GSEs going into out of privatization potentially is we've heard Mark Calabria on this show, Rob, tell us multiple times that part of that plan is slightly shrinking the credit box as one of their methods to not have rate spikes when that happens, and not dramatically, but I think he said his exact quote was like the 3 to 5% of riskiest credit, certainly in this affordability challenged climate, and the GSEs their loans are performing very well. That bothers me. I mean, that could be a big kind of unwanted side effect of this movement to privatize the GSEs. Nikki, to that end, I'm curious with the FHA representation that was on the council with you, if they talked at all about, I mean, in theory, you would think that if they slightly shrunk the Fannie Freddie credit box to try to take them private, that maybe FHA would slightly expand to a company. I'm speculating here, and just hoping that you have some gossip or rumors from the meeting you can lay on us here.
No gossip or rumors on that. I think what I heard from FHA was really their focus and concern around delinquencies and what delinquencies are going to spike, and making sure that their waterfall of loss mitigation services is helping consumers in the best way possible. So I don't know that they're going to be making any changes to expand their box. Do I think that if that happens, that some of those loans will go that route because they have to? Probably. It just depends on what they do to the credit box. And you're right, it is alarming. They have to, like Rob said before, I hope that there are some very, a lot of smarter people than me probably that are looking at this with a lot of intentionality and understanding what these impacts really can mean for the communities that we serve.
Yeah. Rich, when you talk about credit box, so many originators that I talk to and so many lenders, but more on the origination side, they've moved away from agency production for that very reason and gone more toward government or more towards private lending. If Nikki comes to me for a home loan, there's some basic things that I'm going to look at, but especially on bridge loans where, the LTV is there, I'm barely looking at Nikki's credit at all. So for you to, yeah, I agree with Nikki. The FHA is concerned about their delinquencies. It's always been an issue with FHA and government lending. And so for that to ask them to, hey, expand your credit box even further, and they're going to think, well, what's that going to do to our already notable delinquency rate? Oh, it's going to make it worse. Well, you know what? I don't know if we're going to do that. So who steps in? Our private lenders, where more originators are sending products, or non-QM. And you still have to have the ability to repay, but the non-QM sector of the industry has certainly increased its volumes dramatically for varying reasons. Not the least of which it's easier to deal with. So, yeah, I wouldn't look for a lot of movement on credit from FHA, especially in this administration.
Yeah, and I know delinquencies are up, but the reserve fund is also at like 6.5 times the federally mandated limit, the funds they have in reserve to protect against delinquencies. So, you have that part of it too. I mean, it is, kind of telling both sides of the story, but I just think that is one of my worries of just this next year or two. There's some things going on that I'm in favor of, but my big worry is the shrinking GSE, credit box, number one, and just a lot of things that could provide some relief, like guarantee fees. We've talked about it ad nauseum on the show. They used to be 17 basis points in rate. Now they're in the 70s. That's why Fannie and Freddie are making so much money every quarter. Like that, if they weren't going private, lowering guarantee fees could be a great weapon to, combat affordability, but there's no way they're going to do that, and the FHA MIP fund, reductions has been bandied about a little bit, but I can't see any chance of that either. So it's going to take some creative, non-governmental solutions, to Rob's point, I think, to continue to, help fight affordability and getting people in homes.
Yeah, and that's actually been the focus even with what has already shifted. So we've already seen the GSE shift on a few programs and products, right? They're taking a pretty big shift on their outreach strategy and how they are reaching consumers and bringing awareness to the affordable housing products. And so with, having consumers where they're at already believing that it's not possible, having that engine be a big outreach and education and financial literacy, that's pulled back, right? So there are already gaps being created that has the private sector has to look to fill. So yeah, big concern.
I love it. That's something that should be talked about more. We'll do our part and start talking about it more here on the big picture, because it is going to take creative solutions to, we're in kind of a little quagmire here with just the housing stock in America, affordability, inventory rates is one part of it. Where, to Rob's point, there's a lot of other factors impacting it. And yeah, just where the more good, smart people we have sitting around tables like the one you and Bob Niemi were at Tuesday, we just need more of that to happen in this industry, especially these next couple of years, I would argue. So,
Yeah, I mean, that's why I'm excited for this convergence work. So taking convergence collaborative and making it a little bit more national, which is what the NBA announced in October. I really am excited that the NBA is seeing those gaps and I'm already seeing them start to fill in those pieces. So that's the exciting part. We do got some people looking at it, right?
love it. Well, as always, the time flies. Nikki, thank you so much for joining us. We
Yes, thank you.
failed to disappoint, and appreciate, yeah, your energy, your insight, and yeah, just your outlook on the market, and all the things that are critical to it right now. So thank you so much for making the time for us today.
Oh my gosh, I mean so much from you guys. Two legends. So I appreciate it. Thanks for having me on. It's a lot of fun. And Rob, you made it. You made it. You look, you're good.
I know the battery held in. Thank you, Dell.
Once again, thanks to all of you for taking part of your Thursday afternoon with us. If you're listening to the pod or watching on YouTube, where most of you consume it, we do the show live. We had almost 200 at one point live in here. Go to chrismancommentary.com to get signed up for the live, and put the faces with the names, and the chat always very interactive. So big thanks again to Nikki, to Rob, our audience, and we'll see you next
And
Thursday at
thank you.
3 Eastern. Have a great rest of the day
Bye,
and
Nikki.
weekend. Take care, guys.
See
Bye,
you
Nikki.
later.